Hello, ladies and gentlemen. I'm George Bucur, Managing Director and Co-Head of MarshBerry Specialty Practice. Today, we're here to bring you an interview with Joel Cavaness, President and CEO of RPS, which is a division of Gallagher. Joel started risk placement services a couple decades ago and has made significant traction in the overall marketplace. Joel, thank you very much for being with us today.
Absolutely. Thanks, George. Appreciate the opportunity to be here.
Excellent. Pleasure is all ours. So there are many dynamics impacting the overall insurance distribution segment. And one of the very clear trends that we have seen is the movement of value from that of the underwriting segments, from carriers, risk takers, in other words, to that of the insurance distribution sector. And part of what is driving this is the fact that the brokers, frankly, are just getting very, very large and frankly accumulating a lot of clout. Part of what is supporting that is the partnership of retail distribution, in other words, maybe a Gallagher, with that of specialty firms, such as a risk placement services, which is comprised of programs, binding, and wholesale brokerage. This movement and accumulation of premium is really putting a lot of power into the hands of brokers. Joel, maybe you could go into a little color and detail in regards to how Gallagher and specifically RPS leverage that premium value, volume, and clout that comes with it.
Yeah, so obviously a lot has changed over, say, the last, even 5 years. Really, the use of data. We've all been collecting mass amount of data and information on the particular placements that we do, categories of risk that might be similar, homogeneous risk that might be similar. And that's really allowed us to use that data and that information. It really gets pretty granular, of course, to be able to, I probably would stop short of leverage, because that's a tough word to use, but it does allow the flexibility to go in and really view these large blocks of business, whether it's on almost any distribution company side, and be able to create something that is more proprietary or exclusive or creative or different, or maybe even has additional bells and whistles that the marketplace generally is not offering today. And that has truly been a game changer. No one actually was in the past been able to accumulate and view their data in a different way, slice it, dice it, use data scientists, use all the different tools that are available. And I think that really has become a turning point in the marketplace and truly a competitive advantage.
One thing that we have heard over and over the last 12 months is the importance of data. And for firms that have it today, you are ahead of the game, generally speaking. In 2 to 3 years, that's going to be table stakes. And in 5 or 10 years, if you don't have that data, you're out of the game. And so I think it is very important, and especially for those independent firms that are out there, to heed those words, because it's frankly mind-blowing to me how few firms, independent firms specifically, have access to the data, and frankly, some of the large consolidators as well. So I think that's a very important highlight or point to highlight there, Joel. Thank you.
It is. It's fascinating. We started studying data years ago inside of our organization. Got a lot of help from the outside to understand exactly what we should do with it. And we invested heavily inside of our organization to really hire teams of data scientists to actually tell us things that we would have never recognized.
It is changing the face of the industry, no doubt. Now, Joel, as we think about the overall risk takers, the carriers, the markets, how have you seen the dynamics changing on that? Or what are you hearing about those relationships as we are in the midst of association season with target markets and WSAA and several others? I think you probably would have a unique perspective on that most wouldn't. And so what is the general theme or messaging you're hearing from your carrier partners?
Yeah, I guess I would tell you it's still very cautious. There are still an awful lot of unknowns with the, what's going on in the economy, what's going on with the court system still being clogged up from 2 years ago. And of course, a lot of the jury verdicts that are still out there, call them nuclear. And then on top of it, you throw litigation funding in there, all these concerns. If there was, George, if there was just really one thing that was facing, the insurance world, we could always navigate through that. But you have times today where, rising cost of property, it's always a focus. It's always a conversation of insurance to value, because people necessarily may not have been keeping up with their valuations. So now you have, that clash of rising rates on top of a clash of rising insured values. And I give a lot of credit to the personal lines market. They've done a much better job of, requiring insurance to value versus commercial, where it's more complicated. There's a lot of different types of construction out there. And so they've done a pretty good job of doing it, because you can't go in and change your home's value. But when you submit an SOV, there's a lot of complicated factors out there. So there's just, I would tell you that it's still cautious. I would also tell you that the common theme coming out of WSIA was pretty much more of the same. We're still seeing rates increase, and there still is a very cautious environment in the underwriting community.
Excellent. Thank you for that perspective, Joel. It actually is astounding to me, the growth on the E&S side of things that we have experienced over the last several years, really unprecedented compared to historical norms. And it is something that we are continuing to monitor, especially in this inflationary environment, as this is a run that very well could continue for the indefinite future. And it sounds like that is the case from your perspective for the immediate future of what we're seeing.
Yes, certainly all the signs point that direction. They're forecasting, of course, the E&S business to be $100 billion in premium by year end. That is a big number, and that's triple what it was just a few short years ago. So we don't really necessarily see any change in sight. And I think the flexibility that we're able to provide will just continue to fuel that growth.
It is a very exciting time, no doubt, in a growing industry, and one that, frankly, you were right on the front edge of. So again, Joel Cavaness, President of Risk Placement Services. Joel, thank you very much for your time. And to our viewers, thank you for your time as well. Any questions on the presentation or what we're seeing in the marketplace, please do not hesitate to reach out. Until next time, be well.